Well, it's a beautiful Wednesday morning in the city of Lagos. And thank you for joining us on Business and Economy, where we speak with analysts and economic drivers. Well, my name is Frank OMALPEH, and today is going to be a very interesting show today. SABENA, it's good to have you on the show here today again. Now, let's look at this. Very important here today is the fact that the cash reserve ratio has been reduced from 75% of what it used to be, will I say, in the last meeting, from 31 and 20% on the private sector deposit. And we're beginning to see the impact in the market at the moment. That's very interesting. Or what do you think?
Well, like you said, it's very interesting, and this is going to leave a very positive note on so many other things, including the public and private depositors, like you said. And however, what I'm really impressed is that the monetary policy rate didn't change. It was stable at 13%. But, you know, analysts are like saying maybe it might change by the next quarter, that's in July. So they're just like, okay, let's just see plus and minus.
Even before this meeting, a lot of analysts are even saying that it will not change, and you know, true to their projection and forecast, we're seeing it. They still leave it at 13%. Again, what people are saying again is the fact that the cash reserve ratio, which has been reduced to 31% on the public deposit and 20% on private sector deposits. And what, according to analysts, they are looking at the fact that this new decision or the direction for the economy might affect the value of the naira, in the sense that we're going to see more money in circulation, more liquidity in the market. You're going to see them pushing more money out, and that again might see might push a little bit the inflation up a little bit from what we have now. You know, inflation jacked up from the last previous month to 8.7%. Now, that's the impact of the fact that we're seeing a lot of money in the circulation, and the CBN is trying to do what they know how to do best in order to curb inflation, but yet we're seeing it being pushed to 8.7%, which according to analysts is really fair for the economy, not too much on the high side. But with this decision, with this new policy in terms of the interest rate and the cash reserve ratio, well, we started seeing the impact in the market yesterday, where the yield in the market as well also dropped a little bit, just because of you know, we're now going to have more money in the market. Now you have economic news. Let's begin with some economic news right now. Here, the central bank has harmonized the cash reserve ratio of the public and private sector deposit at 31%. The bank, however, retained the monetary policy at 13%. Well, the CBN governor, Godwin Emefiele, who announced these after the monthly monetary policy meeting, said the harmonization was necessary to curb abuse and improve the efficacy of monetary policy. He also explained that the committee also considered that the current discriminatory cash reserve ratio and public and private sector deposit will not only constrain the policy space, but could also inspire a moral hazard by private market participants. Well, now the breakdown is on the screen for you to see there, but later in our subsequent program or bulletins, we will bring you what really went down the last day of the policy committee meeting in Abuja, which held between May 18 and May 19.
Okay, and some more economic news. The Nigerian Foreign Exchange Reserve actually rose slightly by 1.05%, and that's from 29.49 billion the month earlier to 29.80 billion dollars, and that was by May 15th. And that was the data that came out from the Central Bank of Nigeria, and that was just yesterday that came out. Funny enough, the foreign reserve coming down slightly. I beg your pardon, rose up slightly. What do you think?
By 1%. Well, maybe we'll begin to see the impact of the fact that the news, the positive news inflow into the market will begin to affect every other sector. Well, we've been clamoring for more activities in the real sector in terms of agriculture, production of crops, and ensure that we push out more products rather than importing. Most likely, I'll be having short of that activities over the years, but we will know that basically it might stop soon and probably prove a little bit better than what we used to have. But the good news that according to Reuters, the Reuters reporting that the reserve, however, was down by 20.6% year-on-year compared with
37.5 billion dollars they had last year in the reserve, but this year it actually fell and then rose slightly by 1.05%. However, they actually attributed it to the oil slump price.
But a lot of people are even saying, most economists are saying, why should the federal government save money if we need some other things to invest into, like in the energy sector or in the power electricity sector? So if we have other problems, now you're borrowing and you're saying you're paying salary, you're borrowing and you say you want to do some other project or capital project and all of that. But if you're borrowing, how about the money we have in reserve? A lot of people are questioning that even it's not healthy for our economy that will have money, hidden somewhere or reserved somewhere, and then some other sector of the economy are suffering. A lot of people have argued that out. Why some other will tell you that, well, we need to have reserve, we need to save for the future. Then again, if in terms of saving, then you also need to ask questions like, how about excess crude account? How about all of that? What are they using it for? What is the essence of that saving? So those are the questions that we really need to.
And they are still left unanswered.
Well, maybe the incoming government, like every sector of the economy, they are really looking up to the incoming government to do something about the structure of economy in this country. Maybe
and we putting too much pressure on this incoming government when they haven't even started, they haven't even come in. We're already expecting too much.
Probably that's the best way to put the government on its toes and say
on its
that you have a
but you
lot
must
of things
give
to
it
do.
time. You must give them time.
Well,
Rome wasn't built in a day.
Well, Nigerians are not patient.
He has a lot of problems in his hands.
Tell you.
We're talking about electricity. We're talking about the oil sector. We're talking about diversification into other sectors like mining, like
agriculture, maritime.
There's so much. The incoming government cannot do it in a day.
Well, there's so much to be done, but they will tell you that we have voted, our vote counted. We have spoken through the ballot. Now, it is now time for us. So, by pushing more pressure, I want to believe that maybe by putting more pressure, it will put the government, the incoming government, on its toes and say, hey, Nigerians have so much expectations of me, so I need to sit up and ensure that all of these promises during the campaign I will deliver,
maybe
even though
just take it
might not be done
at a time.
Well,
one step at a time.
Let's move away from that and take a look at what went down in the capital market as at yesterday. The market shared by 0.21%, bringing year-to-date performance returns to positive 0.14% as at the close of the market yesterday. You have the figures, Sabena.
Oh yes, it shared slightly by 0.21%, but again, the markets closed with a market capitalization of 11.79 trillion naira, and of course, it's also closed at 34,706.93 basis points. And funny enough, beta class with a 10.24% gain emerged as the top gainer, followed by Skybank and Vodafone, Maybaker, Wema Bank, and what have you, with 5%. But on the flip side, Covington rock bottom. at 9.46% to close at 3 naira and 35 kobo. Well, the ticker was also trained by Aglavans, Port Paints, Briscoe, and Total, respectively, with 4.94% and 4.67%. 4.35 and 4.07%. Well, analysts also attributed this to the market performance, to bargain hunting and profit taking on stock, which recorded significantly price appreciation over 4 consecutive trading days of gains.
Well, there you have it. But let's move away from the capital market, or the what happened in the market, to the money market yesterday. The interbank rate jacked up across tenor, and the interesting one is the fact that overnight borrowing jacked up by 10% in the last 2 trading days to about 29.29%, and 6-month instrument, in other words, 6 months borrowing, also went up by 0.19% in that order. So with the average change of Nigerian interbank offer rate across tenors pegging at 7.41%. Well, the MPC meeting, talking about Monetary Policy Committee, following its recently concluded meeting, announced the intent to harmonize cash reserve ratios of all funds at 31%. Like we would talk about it earlier, that the fund of the public sector is now at 31%, while the private sector funds, in other words, your money, my money, deposited in the bank will now have a reserve of all the total money deposited by you and I by 20%. But why the public sector fund, like the federal government, the institution, agencies and all of that, deposited into the bank, will now reduce from 75% to 31%. Assuming you deposit, like maybe an institution, agency or institutional investor deposited like $100 billion US. So the bank, instead of reserving like 75%, it will now be 31%. 31% will now go to the central bank for reservation. Why the rest, he will now keep it. Formerly, it was 75%. The CBN will ensure that give us 75% of that public deposit and take the rest. But now I think they are going to have more money in the market. Well, the local naira, or talking about the local currency, appreciate by 0.05% against the dollar in the market yesterday, and why the forward quote traded flat for the day also, but at 198 the naira closes to the dollar yesterday.
That's been relatively stable.
Yes, relatively stable. Relatively stable. You can also, at the black market, it's really outrageous. From 200 to 210, 215, 222. Well, of course, it's been dropping recently, but probably has gone up as at yesterday. But of course, the mid price settles at 198 naira to the dollar yesterday. Well, there you have it now. Let's take a look at what the CBN will likely do today, talking about Treasury bills auction or issue. And the central bank will hold a Treasury bills primary auction today, which is worth about 110.94 billion naira. Will also mature today, and the same figure will also be issued today as well. So the tenor include 91 day, 182 day, and 364 days. So the offer rate on 91 days ranges from between 9.80% to 10%. But the advised rates by analysts are the security. Merison Securities Limited are also advising that they trade cautiously. So all of them might jack up by 1.75%. So night one day worth 32.44 billion, 22.82 billion naira rather for 182-day instrument, and 55.68 billion naira for 364-day and you can see the offer rate there. Well, that's what we have here. Sabena, one important thing is the fact that the federal government has passed the budget, 2015 budget,
yes,
into law. And looking at the breakdown, you now see that the education sector has the largest chunk of it. I think this is very, very interesting. And a lot of people are saying
392 billion naira.
Yeah. And before now, what Nigerians are agitating for is also to look away from all the sector of the economy and look at education, looking at the fact that the standard of education is falling from what we used to have in the 70s, 80s, and early 90s.
Since 1979, education has been dropping. And this also evolved, brought about private universities coming in. And of course, with private universities, we all know the implication of all of it.
Well, maybe these large chunk of this 2015 budget going into the education sector, maybe the government is trying to make a statement and say, I think we need to give the education sector a priority. And maybe a kind of signal for the incoming administration and say, you see, well, I'm going, but of course, we're looking at the education sector. We need to, I'm sure there is a message there that we need you to take a look at the education sector, that is why we have put so much money, but away from the education sector, the health sector as well.
What about the security sector?
Well, of course, the security sector
the police
as well.
And
the health
military
sector.
I think they also had
okay, let me start from the health sector, which is gulping about 153 billion naira for the Ministry of Interior, also 25.1 billion, and the Ministry of Works also there. But if you take a look at what they are saying here is the fact that the Police Command and Formation will receive a 303.8 billion. The military, which is part of security, will get about 338.7 billion. So let's say education sector, the military, which comprises of the police and the security rather, which comprises of the police and the military, will take almost about half a trillion naira, over a trillion naira there, billion there. You can see there. So you can see half a trillion, 3.3, and then 303, and you have it. So at the end of the day, you are going to be hitting almost a trillion naira
just
there.
at 303.
Maybe the analysts that we're going to have on the talk show today should be able to give us exactly what is the cost implication and what is the impact this will likely have on the education sector, especially in the coming government.
What about the Ministry of Works? You know, they attributed only 25.1 billion.
Well,
I think they've done tremendously well, you know, some parts of the country, roads, express roads.
Well, I don't know how to analyze this one, but I know that maybe analysis of some people who are experts in this will be able to tell us that if that figure is okay for the Ministry of Works standing at 25.1 billion.
And the capital expenditure actually dropped slightly, you know. It wasn't, they didn't.
Let's move away from that now and take a break. When we take a break now, yes, of course, it will be time for our discussion segment. We'll be back after this time out. This is Business and Economy.